Does it feel like your money and retirement is in danger? With prices still elevated, high interest rates, and the mounting national debt, the present and future purchasing power and cost of living of everyday Americans is more and more uncertain. All the while, central banks around the world are reducing their dollar reserves and buying gold in record amounts not seen in history. Do they see something we don't? Are we seeing the beginning cracks and breaks within an overly leveraged fiat system? And what can we, ordinary Americans, do about it? If you think that you may be falling short of your retirement goals, see the link in the video description to the free inflation and retirement calculator. To shed light on this present economic environment, we will hear from economist, White House advisor, and author Jim Rickards, economist and investor Keith Wiener, and CEO of Shapeshift, Erik Voorhees.
As we all know, mankind has used many different things as money. Monies come and go, and the adoption of one monetary standard over another is the rule rather than the exception throughout history. But a society's choice of money is not arbitrary. There are certain attributes of money which seem preferable to others. Gold scores highly on these attributes, which is why it has remained an indelible monetary standard for millennia. Fiat works pretty well, right? It's got pyramids and government buildings printed on it, so you know it's valuable. Also, it is backed by paper. Paper can be burned if you're cold in the winter. There's its intrinsic value. Try that with gold. But a skeptical observer should know that fiat money is an absolute scam and something altogether inappropriate for an ethical market-based society. As I like to say, you cannot have a free market when the most important good, money itself, is centrally planned and controlled. Fiat money and a market economy are mutually exclusive concepts. Like oil and water, they can certainly be mixed up together when force is applied, but they will naturally separate and dispel one another over time. Indeed, the average lifespan of fiat is less than 50 years. The US dollar only became fiat in 1971.
Since gold was demonetized in the mid-1970s, you have, let's just say, 2 generations plus of scholars who have never learned about gold. The older scholars know better. I've spoken to Ben Bernanke about this. He understands it. He just won't say anything good about it for the reason I mentioned is he's one of the guys with his hand on the printing press. But all the younger students and younger scholars have been greatly, I would say, disserved and disadvantaged by the fact that they have not had a good education in gold. And what you get are these really propaganda points that gold caused the Great Depression, which is not true. There's not enough gold in the world to support finance, which is not true. We're going to try to inflate our way out from under our debt. That's the American way. Like, we don't actually default. We just inflate the currency away. So we say to China, here's your $1 trillion. Good luck buying a loaf of bread. Take China, for example. I mean, they're bleeding reserves. First of all, their reserve position has dropped. But what they can do is buy gold, which they're doing by the thousands of tons, by the way. These are enormous purchases that are going on. If the U.S. does inflate the dollar and does destroy the value of the paper, what's going to happen to the gold? It's going to skyrocket. So what you have is a hedge position where it's like a seesaw. They own both sides of the seesaw. One goes up, the other goes down, but they maintain the value. But investors need to look forward. I call it the curse of the 2-second attention span. People worried about what's happening today or tomorrow. Well, that's fine if you're a day trader, but if you're an investor, you're worried about your retirement, you're worried about wealth, your children's well-being, etc. You ought to be looking a little further down the road. Right. Well, the first piece of advice I would give is position now. What I recommend to investors, you want about 10% gold. Yeah, maybe a little more if you want to lean into it, if you have a higher risk appetite, but not much less than that.
Before the dollar was a fiat currency, it was a legitimate currency. And what is a legitimate currency? It's a currency that's actually backed by real money. In the case of the dollar, that real money was gold. Gold backed the dollar. And what gave the dollar value was the gold that backed it up. So nobody wanted dollars. Dollars were just a more convenient way of transacting in gold. And, before governments began issuing currency, private banks issued currency backed by gold. Again, the private currency simply facilitated gold transactions. And then before they had paper money, they just had gold coins. And, coins were an improvement over just nuggets, right? Gold bullion. Why were coins better? Because if the coin was made from a mint that you recognized, you knew exactly how much gold was in that coin. And why is that important? Well, because gold was a commodity, right? And if you are exchanging goods or services for gold, you want to know how much gold you're getting, because that's, it's the weight of gold that's important. How much gold am I getting for whatever it is that I am selling?
You owe yourself an answer to this question, and you owe yourself an answer with intellectual rigor. And that is, if the word for the piece of paper that is redeemable for gold is money, then what is the word for the gold? When you pass that piece of paper across the teller window, the bank teller pushes back a gold coin. If the word for the piece of paper is money, what's the word for the gold coin that it redeems for? It's a very serious thing. It's the confusion. Steve Forbes uses the analogy of You go to one of those places, you check your coat, and they give you this paper receipt that says coat number 1234 on it. Nobody would confuse the coat check receipt for a coat. Nobody would think that the coat check receipt could keep you warm when you go outside and it's 15 degrees and the wind is blowing. There isn't that confusion. The difference is that's a paper receipt, essentially acknowledges that this custodian has a coat with your number on it and nothing more than that. But when it comes to money, that distinction has been rubbed out and deliberately so with government taking so many actions, including propaganda in public schools. And so that's the sort of crux of the issue is with a piece of gold, you own a physical object in your hand.
How do you hedge against an ever-depreciating fiat dollar? Sound money. Sound money is built with assets that have scarcity, a long track record of trust and value, and cannot be printed by central banks. Policymakers, institutions, and governments may decide the fate of our currency. It's our responsibility to safeguard the wealth we have because no one else is going to do it for us. If you are ready to start protecting your retirement savings through a tax-deferred Gold IRA, see the links to the free guides in the video description. To attend a free gold education webinar held by Augusta Precious Metals, see the link in the video description. I will leave you with a customary quote from the famous hockey player Wayne Gretzky: "I skate to where the puck is going to be, not to where it has been." Thanks for watching.